So in today's video, I'm going to run through the LLC tax strategies that the rich use to get richer. I'm a certified public accountant and the owner of a tax technology company. Every year, my company and I help businesses throughout the United States maximize their income through tax strategies typically reserved for the wealthy. The truth is, many business owners leave cash on the table because they just don't know the LLC strategies that the wealthy have used for decades to reduce their tax bill. Well, today, we're going to peel back the curtain so you can see how the rich operate their businesses and implement some of their strategies too. Let's dive into the video. So the first strategy that I want to talk about is this concept of maximizing deductions. And maximizing deductions is just saying, let's look at after-tax versus pre-tax dollars. And is there a way that we can turn spending that we're going to do no matter what, whether we're a business owner or not, but can we turn that spending into a business deductions? So instead of spending money that's been taxed, so taking money out of the business and then going and buying personal items, those types of things, how can we take that spending that we're going to do anyways, but turn it into a business deduction? And so when most people hear this concept of maximizing deductions, they think, oh yeah, my accountant always tells me, go buy a truck, go buy a computer, go buy a piece of equipment at the end of the year to save on taxes. And that is absolutely not what we're talking about. I would never advise someone to go buy something that they really don't need just for a tax deduction. But instead, when we talk about this concept of maximizing deductions, we're talking about taking spending that you're already doing, you're going to do no matter what, but finding a business purpose for it and moving it from an after-tax spending into a pre-tax spending, moving it from spending after-tax dollars into a business expense. So we want to think about things like a home office. That's spending that we're already doing. Automobile. Maybe hiring your kids in your business. How can we hire our kids in our business? Maybe dining and meals or travel or electronics or all these different types of spending that we're doing anyways. But now as a business owner, we have the opportunity to find a business purpose for it. Now, this type of strategy, this concept is available to business owners of all sizes, whether you're making $1 million a year or you're making $10,000 a year. This concept, this strategy, this idea is available to you. And the government does this. This is part of the government's incentive to get people to become business owners. The government wants business owners. And so as part of an incentive to that, they say that if you have an expense that's business related, you can use that to offset or reduce your business income. So let's go through an example because I think this helps drive this concept home. Let's look at hiring your kids as an example. Hiring your kids. Now, whether you hire your kids or not in your business, you're supporting your kids. You're sending them to basketball camps. They're going to amusement parks with friends. You are always constantly supporting your kids. And I'm a dad. I know how expensive kids can be. But what if there was items that your kids could do within your business? And by utilizing this strategy, you could hire your kids in your business, get a business deduction for them, and your kids potentially pay absolutely no income tax on that. Then they take that money that they have now made through as being an employee for your business, and they go to those basketball camps. They go to amusement parks with friends. They maybe fund a Roth IRA with those funds. But this is a way to take money that we were going to spend no matter what, but now we hire our kids in our business and we get a business deduction for it. And there's more than just the tax savings benefits here. The benefits of having our kids in our business, learning this idea of working for a living. Now, let's say we hire our kids and let's just say modestly, we paid them $5,000 for that work that we did. That $5,000 that we paid our kids that we're going to spend anyways, but now we're running it through the business as a valid business deduction. If you're in the 40% tax bracket, that's over $2,000 in savings. So you pay your kids $5,000, you save $2,000, and your kids potentially pay no income tax on that income that they received. Now, of course, we need to dot our I's and cross our T's on not only the hiring kids, but any type of tax strategy that we're doing. And, for this idea of maximizing deduction, I said, just keep records of your spending. If it's a home office, write down, okay, what qualifies this as the home office? What's the spending that we're being reimbursed for? Keep receipts, have logs, keep proof. If you're hiring your kids, we need to have the kids doing actual work. We need a job description. We need an agreement for them to be an employee of a company. We need to do time tracking. We need to pay them a reasonable rate based on the work and time that they're putting in. And we need to make payments to an account in their name. So there's a bunch of different things that we need to do to make sure that we're dotting our I's and crossing our T's, crossing the T's on this idea of maximizing deductions. So if you want to learn more about implementing maximizing deductions, whether it's a home office, automobile, electronics, travel, hiring a kids, all these different strategies, check out TaxElm, which is a full service software that gives you full access to tax experts as well if you hit a bump in the road. All right. The second strategy I want to talk about is retirement planning. Now, business owners all the time I talk to lean on this idea of, well, I'm going to sell my business, and that's going to be around my retirement plan. But all too often, I see business owners get to that point in their career, and their business isn't worth as much as they thought it was. And now they're stuck. And they have to continue to work, and they have to continue to run this business when ideally they would just want to sell it and go off in the sunset, but they don't have enough money to go out in the sunset from that business sale. And so whenever I'm talking to business owners, I say, let's set up a retirement plan. You potentially get some tax benefits from it today, but also it's that kind of security blanket that, let's say your business isn't as worth as much down the road. Well, now you got this retirement plan. You got this security blanket here that you can lean back on. And hey, guess what? If your business sells for way more than you ever expected, well, now you have a little cherry on top, some money that's been sitting there that you put aside. Now, retirement planning within the business is available to, again, business owners of all sizes. Whether you're making $1 million a year, you're making $10,000 a year, you can utilize retirement planning as a tax strategy within your business. And when we talk about retirement planning, it really comes down to just how much do you want to put away? And that's going to determine what vehicle that we use for that retirement planning. So there's options out there like 401ks or IRAs or SEP IRAs or solo 401ks. And there's so many different options out there, but it all comes down to how much do you want to put away, and do you have other employees? So let's say you're just looking to take care of yourself and you want to put away $2,000 a year towards retirement. Well, you don't need to set up a business retirement account for that. Just set up an IRA and run that. Now, let's just say you have no employees and you want to put away $50,000, $60,000 a year towards retirement. Well, there's a vehicle called a solo 401k that we can get you set up with for that. The government wants business owners to fund their retirement accounts. That's why they give us a tax advantage. Whether it's just a traditional retirement account where you get a deduction going in, which reduces your taxable income, or it's a Roth account where you get no deduction up front, but it's going to grow tax-free. Both of those vehicles and methods are a benefit, are an incentive that the government says, we want you to retire. We want you to put money away towards retirement because it also has less dependency on Social Security. But first off, the government wants you to put money away towards retirement, and that's why they give you an incentive, either a deduction up front or tax-free growth and withdrawals. You choose which vehicle you want to use based on the retirement plan that you have set up. Now, I often say, like, if you get that tax deduction up front, well, then it's just kind of a tax deferral. So you're getting tax deduction today, but when you withdraw from that retirement plan down the road, there will be some taxes due. So determining which retirement plan you go through is really going to depend on your situation and what you're looking to do and what your tax situation looks like. Because you might go the traditional route, you might go the Roth route, or you might do some combination of the two. Now, when you talk about retirement planning, you want to make sure that you work with a strong partner for this, someone that truly understands retirement planning for business owners. Because if you set up the wrong retirement account, you can be handcuffed down the road where now you have to switch retirement accounts and do all these different things. But if you work with the right person from the beginning, they can set it up correctly. They can get you in the right structure that makes the most sense for you today, but also is a good vehicle for when you want to grow your business. One other aspect I want to talk about is retirement planning. Is as a business owner myself, I was always scared of setting up retirement plans because I thought they were costly, expensive, confusing, all these different things. But once I found that right partner, it all cleared up and said, should have been doing this retirement plan for so long. And now I just missed out on all those years I should have been doing it because it is reasonably cheap to get set up. And if you're working with the right partner, it can be very easy as well. Now, within TaxZone, we have a partner directory. So we work directly with one of the best retirement specialists in the country that can help you get up and running a retirement account for your business. Finally, I want to end this video today on talking about S corporations. An S corporation is an election, and it's a way that you can minimize the amount you pay in self-employment taxes. So if you're set up as a sole proprietorship or a single member LLC, you pay self-employment taxes on 100% of your income. But when we do an S corporation, we're electing for our LLC to be taxed as an S corporation. Now, we do need to have an LLC to be set up initially, but with an S corporation, we're just electing for that LLC that we already have to be taxed as an S corporation. And typically we say you might want to start looking into this concept once you start to hit profit of around $50,000 or more. That's when it's going to start to make sense. And the reason is that once we elect S Corp status for our LLC, we are required to take a reasonable salary. And that salary is going to get hit with self-employment taxes, but we avoid self-employment taxes on any income over and above that reasonable salary that we took. So let's go through a quick example. Let's say that your business is making $100,000 in profit. You qualify to where it probably makes sense to start looking down that S Corp route. But let's say your business is making $100,000 in profit and you're just organized as a sole proprietorship or a single member LLC. You're going to be paying self-employment taxes of 15.3% on that. So $15,000 over and above your ordinary income tax rate is going to go to self-employment taxes. Now let's pretend, or let's assume that you elect S Corp status on that business. And let's just say that we say, okay, of that $100,000 of income, we determine that for the work you're doing and everything you're doing in the business, a reasonable salary would be $40,000 for it. So you're going to take a reasonable salary of $40,000, and then you're going to have $60,000 that you're going to take as an owner's draw, a distribution out of the business. And if you make that S Corp election, we determine a reasonable salary is $40,000 on that $100,000 of income, we're going to see savings of over $9,000. Now, that's just not this year. That's this year. That's next year. That's the year after that. And it just keeps compounding. Think of the things that you could do, whether it's in your business, grow your business with an extra $9,000 a year. In this example, on just $100,000 of income, or the debt you could pay off personally, there is endless possibilities from the savings from that. Now, with an S corporation, you need to dot your I's and cross your T's. There's things that you have to be careful for. You need to ensure that your salary is reasonable. You also need to make sure you have payroll set up, and there's going to be costs to that. There's going to be tax costs for tax prep, because now you have an official business tax return that needs to be filed. It's a little bit more complex and costs a little bit more. So there are definitely some things that step in the way that we need to make sure that we're doing correctly and factoring in when we're making this decision of doing an S corporation or not. Now, again, remember, I said in order to have an S corporation, you have to have an LLC set up and implemented, and then you elect S corp status on that LLC. Then you start payroll, you file your business tax return, and now you're operating as an S corporation. Now, within TaxZone, we have a ton of information. We have everything from step 1 to the end on how you go about determining if you should be an S corporation, and then how you actually make that S corp election and turn yourself into an S corporation, everything in between there. So now you have a few strategies that you can implement immediately with your LLC. However, there are a lot of details I haven't been able to cover here. If you want to make instant savings, are looking for a tax savings blueprint, or want to have unlimited access to tax experts, click the link below to get started.